FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 6/26/19. Well, markets gyrating, gold going up, Fed rates not being cut quite yet. What is an investor to do? Well, our good friend is back with us, Sam McElroy. And Sam, the Fed left rates unchanged, but they pledged to sustain the expansion. What does all that mean?
I think what it really means is that, when you look at the economic data, as we've kind of been predicting for most of this year, we didn't anticipate to see any interest rate increases in 2019. We've seen some weird things happen with respect to interest rates. We know earlier in the year that the bond yield curve inverted. And we know that even recently, the 10-year Treasury fell back below 2%. So all of these things are things that I think the Fed is watching really closely to try to figure out what it is that they want to do. I think what they're trying to accomplish is to allow the good parts that are really working for us continue to grow so that the economy can expand and hopefully stave off what a lot of people are talking about, which is a potential recession sometime next year.
So you think it's all about the recession, and they see the handwriting on the wall, and they're just going all full out to stop it, huh?
Yeah, I think that they're trying to do the best that they can. And it's hard because there is so much economic data that they're trying to comb through. And, the wrong move in any one direction too much, they may inadvertently create the very thing that they're trying to avoid. And I think that that's something that they have to be very careful of, especially as they navigate these waters. People were kind of talking about, will we see an interest rate decrease? But I feel like it's unlikely. I think that we know that decrease in interest rates is one of the go-to weapons in the arsenal for the Fed to try to pull us out of a recession if we do move into one. So I doubt they're going to really want to decrease interest rates unless, things really go south and they have to, because they want to leave as much room as possible to be able to drop them if they need to as a fail-safe.
So they need to keep their powder dry effectively is what you're saying, right?
That's right.
Yeah, but is that really a strategy?
It is and it isn't. I feel like, and I guess this kind of gets a little bit more philosophical from a financial standpoint, but I feel like we, and I say we collectively, have grown to the point to where we just aren't comfortable with market cycles running their normal cycle. I think that, and I'll try to make this as unpolitical as possible because I think that there's multiple different administrations that have kind of played a hand in this, but I feel like we've moved to a level of just unprecedented manipulation with respect to financial markets. I think that the fear of, an economic slowdown or potentially the markets dropping has become so worrisome that we've really kind of overextended ourselves in trying to make these things not happen. But to me, it's kind of like a game of whack-a-mole where, you hit something over here and then it pops out on the other side and then you try to keep doing that. And at a certain point, you've almost created a bigger bubble than if you had just let things ebb and flow the way they naturally were going to in the first place. And I think that that's somewhat of the situation, whether good, bad, or indifferent, that we're kind of finding ourselves in now. By my estimation, and not everybody agrees with this, I think the market has some excess baggage that it really ought to shed. I think that it makes sense. No economy grows indefinitely without having periods of expansion and contraction. Thinking that we're going to be able to stop that ebb and flow that has happened for I don't know how long is really arrogant in a sense. Yeah. And I think that the more we try to do to prevent it indefinitely, the more we actually magnify what it ultimately becomes once it does happen.
You know what it's like, Sam? It's like the parent who doesn't want their child to ever feel any pain. So they're constantly shielding that child from the consequences of their action. They get caught shoplifting, they get caught smoking, and the parent goes and fights for the kid and says it's the school's fault or the store's fault. The merchandise shouldn't be so easy to steal. It's all your fault. It's not Johnny's fault here. And that's what we're kind of dealing with here. It's a real immaturity. and it's a real issue.
Yeah, I completely agree. And I think about, from an investment standpoint, when I'm talking about the average everyday investor now, you think about how much they often get hurt when there is a severe pullback in the equity market. But at the same time, nobody told people to put all their money in the stock market in the first place. So I think there's a real need and a real call for just getting back to just prudent, sound financial conventional wisdom rather than speculating and thinking that things are safer than they really are, and then crying and getting mad at everybody when it doesn't quite work out the way they wanted it to. Kind of going back to what you said, I think there is a need for us to kind of grow up a little bit. I think about other generations, and I'm not suggesting that we go back there, but for any of us who have parents or grandparents that grew up during the Great Depression, their whole mindset towards saving and really pinching pennies and making sure that they're being, really mindful of what they're doing emanates from the fact that they lived through that experience. And I don't think that we want to go back. I know for my grandmother particularly, she still stuffs money in books. And I'm not advocating that we go back to, burying money out in the back shed or anything like that. But at the same hand, I see a lot of people every day that think that there's really no risk investing in the market. And so they don't have that cautious optimism that people really ought to have in terms of making sure that they have some money exposed, speculating, trying to look for some better returns, but some money that they're really just being safer and more conservative with as well, based off of what their specific needs are.
Yeah, that's very true. I totally see your point there. And, we kind of laugh at these older people who lived through the Great Depression and say, well, that was then, and they're just out of touch with the times. But maybe it's us who's out of touch, right? Yeah,
I think that's definitely true. There's always something that can be learned from anyone who has gone through something or done something before you. Someone doesn't have to be my best friend, but if they're driving down the same highway I'm driving down and they're an hour ahead of me, there's some information that I can get from them. They can tell me what the road conditions are like, or whether, there's a massive ditch, whether the bridge is out or something like that. And I think sometimes we always look at generations before us and we say, things are so different now. And we always feel like we're just so much smarter than they are. And like there's nothing that we can learn from them. They're out of touch and they don't know what's going on, but they've made it. They did something right. And I think that there's something that we can always learn from generations, and even from recent history.
I hope so.
If we think back to just the last corrections we had, whether it was the subprime mortgage crisis or the NASDAQ crash, anytime you talk to people, and I guess I probably do this more on a daily basis, people always say, well, gee, I wish I would have known. Well, there's a lot of information. If something were to start to pull back or contract now, you can't say, I wish I would have known, because everybody's talking about it. It's just a question of whether people proactively do something with the information they have.
Yeah, I could not agree with you more here, Sam. So, but for the meantime, it looks like this bull market is alive and well, the least loved bull market in history. It just, has some stumbles here, has some reversals, but there's nothing to really show us that it's anywhere near over.
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The golden age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Eitan Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Eitan will reap the best rewards. Eitan's discovery of the legendary Lost Mountain of Gold at Rodruin and its current aggressive drilling program there could potentially reap those rewards. Eitan Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Eitan possesses first-mover advantage in the under-followed jurisdiction of Egypt, which is currently undergoing mining reform. To stay on top of Eitan's latest drill results and news, go to eitanresources.com. Eitan trades on the Toronto Venture Exchange under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
Yeah, I think that when you start trying to get down to specific timing, this is where it really gets hard for everyone, because I don't know, and I don't know anyone who knows how long the bull market's going to go and when or if things are going to change. But I think that the one piece that we do know is that the market tends to lag other indicators. You know, I think back to the subprime mortgage crisis, and I'm not trying to say that I knew as early as a lot of the other people, but certainly there was a period where the market was still going up, but where there was a lot of data that we were in trouble. I think the market as a whole always tries to eke out that last little bit it can before it really starts to come back down. Mm-hmm. And I think that the timing is really what we're looking at now. By most estimates, we're looking at something around maybe fall of 2020, but who knows? You know, maybe it's 2021, maybe it's something like, you know, further out, or maybe it doesn't happen at all. You know, we don't have a crystal ball. But I think for someone to look at the data and say, because the market isn't in trouble yet, I don't really think there's anything to be concerned about. I would say that you're not looking at the data, in that you're not being mindful of just where this falls from a historical scenario. And it doesn't mean people need to panic. It just means that you need to think appropriately. You know, if you got an 80% exposure in the market, maybe you start to titrate that back down to 60. I don't know. It's going to be different for everybody. But I think that everyone has to kind of gauge where they think their risk level is, what their exposure ought to be, and just to adjust accordingly. You know, if you end up getting hurt by something that happens, and you didn't take the time to actually evaluate whether you were overexposed or not, then it's kind of your fault to some degree.
Yeah, you got to take responsibility. And I think that's what the government is encouraging you not to do. Don't take responsibility. You're just a victim of circumstance, just like everyone else. Even though in retrospect, when we look back, it will be very clear that that is in fact not the case. There were tons of warning signs, tons of just stuff that was just out there in the open. It was obvious. Just look at the condition of the cities, what's happening in LA and in San Francisco. And you can't say that that's not part of the economy. It certainly is. And yet everyone wants to think that everything is fine, right? Everything's fine. Nothing to worry about.
That's right. That's right. There's a lot of warning signs. You know, I was talking to somebody maybe a couple of weeks ago, and I used this analogy, and I was talking about the way that economies tend to kind of expand and contraction. I was saying that if you think about it, it's a lot like breathing. You know, you can't inhale indefinitely or you'll run out of oxygen. Mm-hmm. But you can't exhale indefinitely or you'll also run out of oxygen. There's got to be this constant ebb and flow to create an equilibrium so that things actually circulate and they find their own optimal kind of status quo, so to speak. And I think it's the same thing for any major economy, that is going to have periods of rapid expansion, it's going to have periods of slower expansion, it's going to have some periods of contractions. If it doesn't, it's hard for it to basically find its equilibrium and sustain its own intrinsic health.
Yeah, very true. And that means, equilibrium. All we're taught in science, right? All organisms strive for equilibrium, right? Isn't that the case?
That's right. That's right.
So,
that's exactly right.
And if we don't have
and again,
it in balance,
it doesn't mean that the sky's falling and everybody needs to go to cash tomorrow. That's not what we're saying. Mm-hmm. We're just saying that now is a really good time for people to do some evaluative work to kind of see where they stand, understand their goals and objectives, and just make sure that they're where they want to be. That's really what I think the takeaway message is.
I think that's a great message, and caution, when you enter into uncharted territory, caution always needs to be the byword. And if you don't take caution, right, then like you say, nobody to blame but you, for sure. Anyway, hey, Sam, it's always great speaking with you. Really appreciate you coming on the show. Just tell us where we find you these days.
Yeah, easiest place is on our website. It's just www.atfinancial.com.
All right, and you'll see the link in the show notes to this interview. As always, Sam, good luck. We'll talk to you again soon.
Okay, thanks so much.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.